Good morning, everybody. Thank you for joining us today. My name is Sean Nassiri. I'm actually head of operations and business development for TokenSoft. We help companies do a global and compliant and secure token sale. Prior to that, I was one of the early pioneers in the equity crowdfunding space. Basically, I've spent the last decade helping entrepreneurs either get to or get in front of or get to a point where they can raise money from the gentleman sitting next to me. So we have Christopher Gottschalk, principal at Blumberg Capital. He's visiting us from SF. And we have Morgan Poulsen, who's at GenCast VC, which is a partner of Comcast VC. Guys, why don't you take a couple minutes, tell us a little bit about your firm, philosophy, check sizes, and then we can get into some questions.
Sure. So, as Sean mentioned, my name is Morgan. I work at GenCast Ventures. We are Comcast seed fund. I also spend time at Comcast Ventures, which is our sister later stage fund. So GenCast focuses on seed stage companies in New York City or the Northeast. Check sizes usually of about $1 million. We like to lead or co-lead seed rounds. Comcast Ventures has offices in New York, SF, Palo Alto, LA, and Philly, and does anything from Series A to pre-IPO, so check sizes of $2 to $20 million. We have a single LP, which is Comcast Corporate, but we're not strategic investors, so no portfolio company is required to have any kind of formal relationship with Comcast. It's a benefit we can bring to the table if it makes sense, but just not a requirement.
Morning, Chris Gottschalk, Blumberg Capital. We're a classic early stage venture firm, really focused on seed and Series A. However, we define it more by check size, so 500K to 5 million is the initial check, reserving more for follow-on. And then investing North America, Europe, and Israel. Have folks in San Francisco, New York, and an office in Tel Aviv. And really, we're full tech stack investors, so if it's driven by software, we'll take a look. That said, we've allocated a fair amount of our portfolio towards fintech. We'll get into how we define that, but at a high level, it's the intersection of data and money. So it's pretty broad for us across payments, crypto, banking infrastructure, et cetera.
Okay, so you touched on my first question a little bit. What is fintech to you? Morgan, why don't you start it off?
I think Chris's definition makes a lot of sense. I think of it as software that routes money in some way, very high level.
Perfect. So to that same token, are cryptocurrencies considered to be fintech? Chris?
Yeah, so like I said, fintech is broad for us by design. If you look at the global 1,000 by market cap, technology is first and financials are second. And it makes a lot of sense that those two buckets are being combined. And if you look at the R&D spend of Wall Street here in New York or any financial services firm or insurance, they are rapidly increasing towards what you would call a traditional technology company. So it makes sense that we're seeing the intersection of these two. Crypto and blockchain is just an extension of the technology in financial services. You're seeing a lot of the incumbents try to figure out use cases. As we heard from a lot of our CIOs in the CIO Council we have, it's a great technology still looking for a good use case. And so the technology may be ahead of production and where folks are using it. So we're certainly following it. We've made a few early bets back in 2012 and 2013. But we still think there's quite a bit of maturity for it to become a traditional venture asset class. That said, the crypto and the currencies itself have certainly become an asset class. But as a venture firm, we're looking more on the technology side.
Okay, so that leads me into my next question. A lot of people tend to bundle up crypto and blockchain all as one, but let's separate the cryptocurrency, which is being used to essentially replace currency, dollars, and talk a little bit more about the blockchain technology, things such as ledger and decentralizations. What kind of impact do you guys foresee that has on the future and on your industries and investment style specifically?
So I think it's useful to think about a blockchain as simply a database, right? There's nothing particularly special about the data structure itself. It is a database that is tamper evident, right? So if you try to change the data in a blockchain, people will be able to see. That gives it this special property where you can have everyone have a copy of this database, right? It doesn't need to be maintained by a single party that you trust to maintain accurate records. And if anyone tries to change the record, everyone else will be able to see, and ultimately, if it's working properly, people will be able to come to a consensus about the data inside the database. Now, one of the trade-offs about blockchain is that because you need to have so many people have a copy of the blockchain in order to maintain its integrity, it's actually quite slow and inefficient compared to the databases that back like Facebook or Uber's servers. And so I think the way that I think about how blockchain may affect fintech is where decentralization of the data is important, where you don't want to trust a single entity. Perhaps it's because you don't want that entity to censor you, or you don't want that entity to seize or be able to change the data, and you're willing to accept the performance drawbacks of a blockchain. That is where kind of distributed ledgers or blockchains shine. So I think I'll actually kind of take a bit of a different tack, maybe to play devil's advocate to Chris's statement that's an extension of existing financial technology. I actually think of blockchains as the underlying data structure to build a separate financial system. So less of an extension, but more of a base layer that for the first time in history, we have money that can be created by private citizens that is software and it's programmable. And we've never had this before, right? And anyone can build on it. It's open, it's permissionless. And this is the first time that we have innovated at that base layer of financial services. And so I think we're seeing an alternate kind of ecosystem being built on top of that. We are, of course, also seeing kind of the traditional financial institutions trying to figure out how to use the technology, right? Just as we did with the internet. But ultimately, I think its power is about removing the kind of centralized gatekeeper, right, to money and putting it in the hands of the people.
Would you say it's like a 2.0 or 3.0?
Yeah, I like to say it's money 2.0 or finance 2.0. Yeah.
Yeah, it certainly has the capability to create an entire new financial regime. I think the interesting question you have to ask yourself as a venture investor is, do you believe that the Federal Reserve will be replaced, that JP Morgan, Wells Fargo, and Wall Street will be replaced, that insurance companies will be replaced, that settlement firms will be replaced? Or is the bet that they adopt this technology? And the difference, we heard a great keynote just before this, the difference between the 80s and the 90s and today is that Wall Street has a massive amount of developers that are able to capture this technology and build on top of this technology that they didn't have in the 60s, 70s, and 80s. And so it is an interesting question, and different folks are investing off different theses in how this technology will be adopted, how it will be bought, and how it will be built. And I think that's why we're here, and what's really interesting about our day jobs is trying to figure that out.
So to kind of play on that, separating the currency part of crypto from an investment standpoint, I think you've seen the headlines. Excel, Sequoia, everybody's companies are raising hundreds of millions of dollars in tokens for companies that are built on blockchain, that are providing services to blockchain companies. Is that something that your firm believes in, or what's your thoughts around investing in tokens, which obviously will provide much faster liquidity towards a traditional venture investment?
So at Genicast and Comcast Ventures, we like to say that we're not even in the early innings of blockchain and cryptocurrencies. We're in the pregame, right? We're tailgating in the parking lot. The players haven't even arrived yet. No one knows what the rules are. We literally don't even know what the underlying protocol for this will be.
Sure.
Right. So with the internet, there's a handful of protocols that we've built on, right? HTTP, SMTP, et cetera. We don't know what that first protocol is for blockchain yet, right? It could be Ethereum, it could be something else. Maybe there's a lot of protocols instead of just a handful. And so as a result, we kind of have our lens wide open. We're looking at equity, we're looking at tokens, we're looking at funds, and there's new kind of asset classes emerging, like now security tokens,
Yep.
That are tied to real world assets are becoming more popular. So the long way of saying we're looking at everything, including tokens. I think the big unknown around tokens, you mentioned these big raises, is how will tokens accrue value, right? Tokens are not equity. And in equity, you have a legal recourse to the cash flow of the company that you're investing in. In tokens, you have no legal recourse.
So
There is no
I should
cash
probably
flow.
clarify that.
Yeah.
When I was referring to tokens, I was referring to security tokens.
You were referring
Yeah,
to
security
okay.
tokens. For those not familiar, to his point, yes, there's utility tokens, which essentially operate as, if you go to an arcade and you exchange money for coins that can only be used there, or you go to a casino, that's your utility token. It operates as a source of income or something within that ecosystem, but not without. Those are basically considered illegal in the United States right now. So in terms of security tokens, which operate as a security, you own equity, you own a piece, I think that was going to be more of the focus. Sorry to clarify that.
Got it. No. Security tokens are very exciting, I think, because you can bring liquidity, right, to private securities that traditionally haven't had access to liquidity, and investors value liquidity. There, I think, are lots of open questions about security tokens, not so much on the valuation side because you can use traditional kind of cash flow analysis to value them, but more about the technical implementations.
Yeah, no, I think well said. Look, it's in order to capture value in this market, you need a wide aperture today. And you have to have a thesis on how you'll capture value in the next 5, 10, 15, 20 years. And so that means we're looking at everything. Now, that said, on the utility token side, 95% of what we see, a token's completely unnecessary, and it's a hack to fundraise capital. And so, we haven't invested in any ICO utility token to date, but that doesn't mean we won't in the future. And I think, what we're seeing is exactly what capital markets are meant to be. Capital markets are meant to be a screen against interesting opportunities. Capital markets, we're in a hype cycle for ICOs, and we're already seeing that, at least on the utility token side, somewhat decline. And we're seeing the emergence of very focused funds who are acting as kind of a hybrid venture / hedge fund in this world, and are spending 100% of their time in this space, because for a traditional venture firm that's looking at enterprise software, fintech, ad tech, there's so much momentum and inertia going on that it's hard to be on top of it without an explicit team paying attention to 100% of what's coming on.
Good answers. So I personally grew up in Silicon Valley, spent most of my time in California, moved to New York 3 years ago. Chris is visiting us from SF. I think California, Silicon Valley specifically, has taken the title of startup capital, tech capital of the world. But people tend to say that blockchain and fintech, New York is the capital. What's your guys' thoughts on that? Where is king?
So I grew up in New York City, so I'm biased. Obviously, I work here as well. I would love to be able to say New York is the fintech capital of the world. I'm not so sure we can claim that title yet. For certain aspects of fintech, I think for sure there's plenty of interesting companies in New York, especially when it comes to the intersection of Wall Street and enterprise blockchain. But if you think about kind of crypto or blockchain broadly, and fintech broadly, you have companies like Affirm and SoFi and Coinbase out in SF. And if you look at just blockchain, which is kind of by its nature a borderless, distributed, and global movement, it's not even just between New York and SF. You have London and Switzerland and Singapore, perhaps aiming for that throne. And I think that's ultimately a good thing, right? I don't necessarily want one city to monopolize the talent and the innovation in a certain sector. I think it's great if it's much more distributed.
Yeah, no, well said. We see equal opportunities in fintech broadly across San Francisco, New York, London, and even places like Salt Lake City, Austin, Boston, Hong Kong, LATAM. So it's fairly distributed. Now that said, if you had to say fintech from a kind of global market cap perspective, you'd have to say London. but I would say from an innovation perspective and from a startup perspective, no one city has the crown. And crypto's very distributed. I mean, we spend a lot of time in Israel, where there's a pretty robust crypto crowd, and that's really where we started to kick off. This was 4 or 5 years ago, kind of our entry into that space. Now it's been massively distributed across the globe since then, but you find little pockets of innovation everywhere with regards to crypto. So yeah, hard to crown any one place, the locale.
Yeah, no, I think that's fair, and especially when you look at blockchain and crypto specifically, it's the whole concept of decentralization. You've got teams that are just based all over the world, which is pretty cool, I think. Yep. So besides crypto and blockchain, what are some current trends you guys are seeing in fintech? Chris?
Yeah. So it's again. We're very broad by nature, so I'll tick off a few categories. You've seen a lot of dollars flow to real estate, whether that's figuring out how titles are captured, leveraging blockchain, or how it's a new level of HELOCs, a lot of new mortgage originators. So there's a huge focus in kind of new models of real estate. Especially because those are asset-backed, and there's a large syndication desk, and there's a lot you can do with that paper. And so we're seeing a lot of interesting innovation in and around just real estate broadly, as well as the marketplaces to start to clear and replace capital markets. A few years ago, there was a big push in insurance, and everyone rushed to kind of fund any MGA or insurance company they could find. And I think what folks found out is distribution is very difficult in insurance, and we're starting to see folks actually go into the back end and rewrite actuarial tables and leverage new data and do some interesting, hard, innovative work on the back end, rather than just the really bright, fuzzy website direct-to-consumer distribution in insurance. So those are two places that we're spending a fair amount of time. And then the last is kind of deep banking infrastructure. So whether it's something in our portfolio like Addepar or fund admin software, replacing kind of the Fiserv, FIS, SunGuards of the world, again, which requires a fair amount of tech build. Someone's not raising $500K and spinning these type of technologies up, and they're long enterprise sales cycles. So they're real hard problems to solve, and very interesting.
So I think just to add, my one piece, I think Chris covered a lot of great things. Space may seem like an unusual answer for trends in fintech, but space is actually a very interesting source of new data that we've never had. And the cost of satellites are going down significantly. You now have things called CubeSats, which are little kind of shoebox type satellites that you can launch pretty cheaply. For the first time, thanks to Iron Man, Elon Musk, you have reusable rockets. So the cost of launching is going down. And the really interesting thing about that is now we're getting this kind of satellite imaging 24/7 around the globe. And with the advance of technology such as deep learning and computer vision, you have companies that are taking those satellite images and analyzing them. And the early adopter of that technology is actually primarily financial services. So as an example, there's a company called Orbital Insight, which is taking all these satellite images from both existing incumbent NASA satellites as well as startups like Planet Labs. And they are taking the image of, say, a parking lot, and they're using a computer vision classifier to count the number of cars every hour, every day for 3 months. And then they're using that to predict the share price of Walmart more accurately than any analyst can. So this new source of data, I think we're just starting to see what that looks like. It's a very interesting trend to follow.
Great answer. And that's fascinating stuff about the satellite imaging. Let's talk about some of the challenges. Obviously, fintech is a heavily regulated industry. A lot of these institutions have been around. They have a lot of protocols. You have SEC, you have FINRA, you have a lot of different governances around it. Touch on some of the challenges that it goes into starting a fintech company or scaling one as well.
Yeah, so we started investing about 6 or 7 years ago off a thesis in and around financial services and fintech that started with a conversation right around there. Fintech and financial services look unlike any other traditional venture sector. It's not necessarily winner take all, very long gestation periods, very few kind of overnight success, highly regulated. Cooperation is needed as a necessity. And so for all of these reasons, traditional venture was fairly slow to attack financial services and fintech. Today now, walk down Sand Hill, every large Sand Hill road firm has a GP dedicated to fintech. And so I think that speaks to the nature of the market size opportunity, but it still looks very much unlike enterprise software or any other traditional sector where VCs have made a ton of money. And for us, that means there's alpha in the sector, and so we like that. And we've built specifically kind of services and people and advisors around the firm to help early financial services, fintech companies build product, work their way through vendor management, help them scale, find the right developers, because it's a pretty particular space in terms of product builds. And so we frankly like all of that as a moat around our investing in financial services.
I think the regulatory piece is a critical one to touch on. In the sharing economy, we saw Uber and Airbnb deal with regulations as a kind of adverse headwind to growth. However, those were all local regulations, right? So you have a huge, multi-billion-dollar company dealing with regulators of New York City or Austin, Texas. In fintech, the regulations are mostly national, right? So to even get a banking license, for example, if you said, okay, I want to start a new bank, right? I think Bank of America, they're slow, they're charging me too many fees. I want to start a new bank. Do you have any idea how much that costs? Any guesses from the audience? So it's north of 30 million and several years just to get started, right? That's not even like building any product, that's just going through the regulatory process. And so these kinds of regulatory obstacles make, I think, navigating fintech more difficult than many other sectors, to Chris's point. And as a result, a lot of the early entrants were kind of innovating around the edges and innovating in areas where those kinds of regulations weren't so paramount. So for example, payments, stuff like Venmo and PayPal, or lending, whether it's peer-to-peer or securitizing lending. So there's kind of been a handful of areas where they've been able to avoid that kind of onerous regulatory obstacle. But I think to kind of see true financial innovation, we either need to figure out a way to start banks more cheaply, or kind of returning to blockchain, maybe route around somehow those obstacles and build something as an alternative.
Excellent answers. I think that's a great segue into what do you guys think is the biggest opportunity, or what part of financial services is due for disruption? Like, what's going to get you guys excited if this opportunity comes across your desk in the next 6 months, three months, or a year?
It's hard to be so prescriptive. I think that's what's great about what we do. We're really entrepreneur-led, right? So we want to learn as much as we want to be prescriptive about what ideas are going to work. We have thoughts in and around white spaces, right? We know a lot of the incumbents. We spend time with them understanding what their roadmap looks like, what are they building, what are they buying, and how can we help augment that with our investments. So we're not as prescriptive as, we want to see a new blockchain-based title insurance company, right? That is an interesting use case. There are several folks out there doing that. But we don't think in those terms. We think more in finding really strong, smart, entrepreneurial teams who have a passion to solve a problem and have a unique insight about some market segment for a particular reason, and then have a go-to-market strategy that explicitly exploits that. And so, for us, the screen is strong, smart entrepreneurs and massive market opportunities. And if we see that, we get excited.
So I was on Twitter the other day. As a VC, we spend most of our time on Twitter. That's like how we do our jobs. And there was this really savage, long tweet thread of recent college graduates who were adding more to their student loan balances every month than they were paying off principal. And people were just shocked by this idea. Like they May 2017 had 30,000 loans. They pay every month. They check May 2018. They have 35,000. Like, how is this possible, right? And student loans are the only loan that you cannot discharge in bankruptcy. You literally have it around your neck until you die. And that's actually a financial technology problem in many ways, right? And so I would love to see some innovative solutions in the student loan space. And debt broadly, right? I think debt, whether you're talking about at an individual level, household, mortgage, auto, or at a government level, are at levels that we've never seen before. And I think that financial technology has a real opportunity to help improve it.
That's as much a government-funded problem as it is a fintech problem, though. When you give students cheap money, the universities are smart enough to increase their prices, right? And so it puts a burden on the students themselves. So it's, a lot of these problems that fintech are trying to solve have some other, symptom to them, which is interesting because it's not as easy, again, as solving kind of one very narrow problem, because there is a lot of other, whether it's capital markets, government, regulatory halos that create that issue in the first place. And you close one hole, another one opens up.
I think everyone can agree debt's a huge issue that's not only facing our country, but on the individual level, on the state level, on the city level, on the corporate level.
Yep.
Definitely a major issue. All right, last question before I open it up to questions from the audience. I'm giving you guys the opportunity to talk about one or two portfolio companies that you guys really like or excited about.
Sure. So I mentioned earlier that in the blockchain space, which is actually where I've been spending a lot of time in the past year, we think it's very early and we don't know any of the rules yet. And so our current thesis is very much around picks and shovels infrastructure for developers to help figure out what those rules are going to be. We don't have a lot of confidence in our judgment of what the consumer level killer app will be, but we think if we can make developers' lives easier, we've seen that playbook before with the internet, and so that tends to be one of the areas we're excited about. So the company that we invested in earlier this year is called Blockdaemon. Has anyone heard of Heroku? Mm-hmm. Right, yeah. So you can basically think of Blockdaemon as a Heroku for blockchain nodes. It's a easy way to spin up, deploy, manage, and monitor a node on a blockchain network. So like right now, if you want to do that, you have to go into your Linux command line. There's no GUI. You have to know a bunch of programming languages and things about networking systems, and the average person can't do it, right? And so this just makes it very easy. So that's a recent one we're excited about.
I'll give you a space, and I'll give you two companies we invested underneath the thesis. So we spent a lot of time in the small business lending space. After 2008, the banks really kind of shut down their P&Ls around small business lending. And so we invested in a company called Fundbox, which has a very particular product, a line of credit that they extend small businesses. You connect your QuickBooks account. They look at your invoices and they underwrite your outstanding invoices and then give you a kind of perpetual line of credit that you can pull down and pay down. The second is Lendio. Lendio is a marketplace that we are co-investors with Comcast on. And they are a true marketplace, so folks like Fundbox and others are part of the Lendio marketplace where small businesses can shop for the particular product they need and the rates they're looking for. And so we really like the space. Both companies are growing phenomenally well, and we think most small businesses are kind of underserved, and they are the engine of our economy, and from an employment perspective, are the largest employers of folks in the U.S. So we think that is not only a great kind of venture asset class, but also helps the economy in general.
Absolutely. All right, now we're open to questions. Are you going to do the mic or just room small enough? And please make them questions. I will cut you off.
There we go.
Okay, I have two questions. One is for Chris and one is for Morgan. So first one for Chris. Now you mentioned that you are mostly interested in equity of the company, not the tokens, right? So what type of the companies are you more interested, like companies with new protocols or companies which makes new applications based on blockchain technologies? So either product side or application side? That's my question.
So the question is in blockchain specifically. Yeah, so just to clarify, we would invest in a token. It's just to date we haven't seen the particular reason why we would invest in a token versus traditional equity or a security token for that matter. But we are open to investing across any asset that allows us to capture optimal value if the company and the product is successful. So small disclaimer there. In terms of what we're looking for, we're interested in protocol layers for sure. We're interested in true use cases where there is a reason why blockchain needs to exist, and if there is an associated token, why that token needs to exist, and why I can't spin up an AWS and expose the database as a tool for transparency, or why that token needs to incentivize the developers in a way that in-game type of digital currency would not be able to achieve. So there has to be a particular unique reason why that technology and why that system needs to exist. And we see that, and we've gotten close a few times. But for the majority of what we see, that is not the case. So I guess the use case can be far and wide, but we're looking for, if you're selling this into banks, the first things we're going to do is call a CIO at some bank and say, if they build this, will they buy it? And right now, 99% of the people we talk to are not buying blockchain-based technologies as a software solution. Not yet. They will. That will absolutely happen, and our job is to kind of line up the use cases with the roadmaps and when we think that inflection point is going to happen.
So for the companies which working on new protocols, this is hard to say, if this protocol would work or not, right? So basically, we don't have any standard to do that. So how would you know this is good, protocol than another one, than another, protocol?
Do you have a more broad question for the audience?
No. Okay. That's actually my question is that now you mentioned that you would look like look into this team, what kind of team members, how strong it is. Now, in addition to that, what other attributes would you look into it?
Yeah, look, with whether it's blockchain or not, within any seed bet, there's very low likelihood that this will succeed. We're in a power law kind of tail game in the early stage venture business, and so we don't know if it's going to work. But the signals we look for are really strong technologists, a really strong team. On the protocol side, you can look at technology, you can look at the white paper. And you can try to understand, is there an ecosystem? Are there developers already building on top of this? There are a lot of different signals you can look for, and within each technology, it's somewhat different. But we try to use as many signals as we can get.
Morgan, would you like to add to that before we get another question from the audience? All right, next, anybody else have a question? In the back.
Here's one there.
Hi, good morning. Thanks for the insights, very helpful. Just a quick question on investment horizon. Given the early nature of blockchain technology, what is sort of your fund's thinking on the horizon for the investment?
So I don't think it actually differs that much between tokens and equity for us. So our traditional seed stage venture horizon, maybe 5 to 10 years to exit or to liquidity. On the equity side, that if it's an equity investment for a blockchain, that's no difference. If you're dealing with a token, if anything, you might get liquidity before that. That's the the whole idea. But our position so far has been, even if we were to invest a token, and even if we did get liquidity, we don't necessarily want to become a hedge fund and start actively trading that position. So we're likely to hold it until and make kind of the same calculus we would on an equity perspective, where if one of our investments IPOs, okay, now we're liquid, doesn't mean we sell right away, right? Perhaps we take some money off the table and let some more ride, but the calculus is the same.
Yeah, we're long-term buy and hold investors. Traditional venture funds have 10-year cycles. Most venture funds have 2 one-year extensions at the option of the GP, and the average venture fund it runs 14 years. And so we're typically investing in kind of a 2-3 year investment period on any given fund. And so even the last company in that fund has a 7-year horizon, and the early cohorts have more of a 9-year horizon. That doesn't include the extensions, et cetera. So we're built explicitly to hold for quite a while. Most of our LPs, again, this is one particular asset class, and they're invested across multiple asset class, hedge, real estate, credit, et cetera. So there's not much pressure for liquidity. Where that does come into play, and we've done this in the traditional capital markets, where we've sold secondary shares of companies that have been highly, highly valued, that don't plan on going public or being sold for a long time, where we decide to take some chips off the table or provide liquidity to the LPs. But that's more of a market choice and an investor choice, and less pressure coming from our particular LPs to get liquidity.
And
Yes, thank you for an excellent presentation. Name is Dr. Adal Hussain with World Liberty TV business channel, one of the media partners. I don't know if it was Chris or Morgan who mentioned about the JP Morgans or the big insurance companies who are not really too concerned right now with this kind of technology, as one of you guys mentioned, that they have a great pool of talent who can do their own blockchains and so forth. How soon do you think this will happen on their side, when they will feel certain threat from the industry? Because it seems that they just laid back and just watching it very carefully. Can you just maybe elaborate on that, please? Thank you.
Yeah, I'll give my perspective first, and then more. I mean, he's attached to a corporate, so he's got a good view of probably how they're thinking about it. But just to start, the current incumbents think they can build really cool blockchain applications. Now, whether they can or not, you can decide for yourself where you want to place that bet. But they're at least trying, right? There's a bunch of consortiums that have been built, and they are tinkering with this technology in all of their labs. From what we've seen, very little to almost none of them have any of this in production, right? My sense is we're at an inflection point. We're probably 24 months away, I would imagine, from folks starting to adopt real use cases that don't have a ton of scale, but have a decent amount of scale. But they're not the massive. They're not the settlement use cases. They're not the $1 trillion use cases that everybody talks about. I think they're going to be more niche-y to start, and as the scale issue gets solved, they'll start to move outward from there.
Yeah. So you mentioned that I'm attached to a corporate. So Comcast, like many of the financial institutions you mentioned, are experimenting with blockchains, right? So specifically, we have 2 efforts, one in advertising, one in IoT. Both are designed to securely share data among peers without a central trusted authority and without revealing that data. And so, it's early stage, because, as Chris mentioned, you can't use any of the public blockchains for this because they don't scale and they don't really have privacy yet. And so you have to build either on an existing permissioned implementation or in many cases build your own, which is the approach that Comcast is taking. It takes a long time and is very experimental. I think the broader challenge with existing enterprises adopting this technology is that blockchain is a disruptive and not sustaining technology. So is anyone familiar with Clayton Christensen's book, Innovator's Dilemma? Right, so he delineates these two types of technologies, right? So disruptive technology, it's kind of an overused buzzword. We're probably at fault, right, in the VC crowd for overusing it. It doesn't just mean any cool tech, right? It means a specific type of technology that at first is attacking a smaller market with lower margins, with crappier performance, and it looks totally uninteresting to any of the existing incumbents. Right, so think of IBM and their business when personal computers came about. IBM didn't end up being the leader in personal computers, right, because of exactly this innovator's dilemma. And this is contrasted to a sustaining technology, which is very attractive to incumbents because it offers higher margins, higher performance, a bigger market, right? And so with crypto and blockchain, I think you have this tension, and I'm not confident that any of the traditional incumbents will be the leaders in this new space. I think they will use it and adopt it, just like they use the internet. But I think we'll see a new crop of players who emerge, who are really leading the space, because as a startup, you can afford to live and even thrive on a small market with smaller margins and crappier performance.
Awesome. All right. Thank you, guys, and thank you, everybody watching at home.
Breaky.
Yeah.
Well, here, there we go. Before we let you go, I just wanted to say publicly thank Chris. So when I first started Unbanked Ventures, I reached out to them because I'm a big fan of the work over at Bloomberg. There's not a lot I don't want to discourage anybody or disparage anybody, but there's not a lot of people that are leading in fintech. So I'm a big fan of what they're doing over at Bloomberg. And when I reached out to him, and it's still, we're still there. When we're running my entire program off a GoToMeeting, Chris gladly said, yes, I will speak to your cohort. So thank you so much for your early support, and thank you for being here today. And everyone here, Sean, great panel. To you as well, Morgan. So awesome insight. Thank you guys so much for all your support and everything you guys are doing in the industry.